Good evening, everyone. Welcome to Chewe MK on the 5th of April 2026, 7:37 p.m. Sydney time. Um, Thank you for joining me this afternoon or this evening. Today, like we always do or we've been doing, we will be speaking about one of the most important tools in trading, special Forex trading, which is Trendline. You know, everything in life requires direction. Your life, your job, whatever need direction. Where I'm heading, where I'm going. So everything requires direction. So trading, we don't just want to trade blindly. We want to know our direction, where we are heading. So if we are able to identify our direction, then we are on the right track. So for us to be successful in our trading, for our winning rate to go higher than the losing, then we need the right direction, which in Forex or any other trading, Trendline tell us the direction of the market, where we should be trading at the moment. Either we should be trading or not. Forex or any other market out there have three ways. One, uptrend, bullish, and then downtrend, bearish, and sideways, which we try to avoid when the markets are consolidating one another. There's no one direction. It's just up and down for the few moments. But what we want to trade is uptrend or downtrend. So I will explain to you, like I always been doing, how it works on a chart. But first of all, I will first show you few notes so you can get the idea behind it. You can understand it much better. And then I will show you the example on my chart, how you draw trend line and what is trend line, and how you can identify the upper trend or downtrend. So guys, let's get down to it. And remember, we are still on phase 2. We started yesterday. So phase 2, we on, as you see, the beginner's trend line. Uptrend equal, which means higher highs. Downtrend, lower lows. Sideways, no clear direction. Like I told you, we have only three. One is going up, one is going down, and then the other one is just going sideways. No clear direction. So when we're able to identify the sideways market, we try to stay away from it. You can still trade sideways market if you know what you are doing and make money out of it. So simple trend lines Trend line tell you direction and you follow that. A forward trend line is a diagonal line connecting a significant highs for downtrends or lows for uptrends to identify the direction and pace of price movement. Acting as dynamic support or resistance, they require at least two, but preferably three touches to be considered valid. Traders use them for bounce trading, continuation, or breakout trading reversal. That's like three strategy most people use the trend line to trade on. A key aspect of trend lines, uptrend line connects higher lows, acting as dynamic support to suggest further upward movement. Downtrend line connects lower highs, acting as dynamic resistance to suggest continued downward movement. Validity, a line is confirmed after three touches. The more touches, the stronger the trend. Angles are sloppy, steeper trend lines are less reliable and more likely to break. Trend zone. Do not look for exact lines. Consider them zones to allow to slide price fluctuations or spike through the line. Trading strategy. Bounce trend following. Traders buy on bullish trend line touch or sell on bearish trend line touch, expecting a trend to continue. Breakout reversal. When the price breaks and close behind a trend line, it often signals a change in market direction. Break and retest a popular strategy where traders wait for the price to break the trend line, return to retest it, and then enter in new direction. Best practice, never force it. If the price action doesn't fit the line, it's not valid. Use higher time frames, daily and 4-hour charts offer more reliable and significant trend lines. Avoid extreme angles. Focus on clear, sustainable slopes to avoid premature break signals. Yeah, guys. So that's mostly few details about what trend line is. I'll show you the practical example on my chart. So this 4-hour chart that we will use 4-hour chart, or let's use daily chart to identify the trend where we'll be trading. Before that, I'll just show you how we can draw trend line. So if you look here, Europe USD, this is daily time frame. We want to find trend. Let me see if I can find some good uptrend and show you some example on that. If you look at this trend here, it tells you already that the market is going down. But from the beginning, how will you know that this market was going down? How were you able to identify that this market, when it was here, somewhere here, that it was going down? First, you need to add some tools on the chart that will help you on a higher time frame where the market is at the moment, and then you look for opportunity on a smaller time frame. But I just want to draw. Okay. Here, some of the practical example on the uptrend. If the market was here, and that's your support, the market go up, you will draw your trend line. You will grab your line from here. The end of this bar, the wicks or the body, you click there. This is the line. Well, and then you draw it to this. When you reverse here, it gives you two touch and go back up. It show you the market went higher and then come down, higher low, and then higher high. So this already tell you need at least two touches. These are the one here, two here, the line exactly on the same line. If you draw the line, you need that to able to know that this is a valid uptrend. So I put there, I draw my line to this next one, lower low, lower, higher low here, draw the line. There we go. Sometimes it break. So when this trend came here, that was it. So the second touch, I was waiting for the third touch. When it come here on the third touch, what happened? It break the trend. You know, when it break like that, it already showed to me that this trend is done. For me, it's no longer valid. Understand? So I'll have to look for new trend line. So let's get another example. That's how you identify trend line. So when the market, so this whenever the market, this is downtrend, lower low, and then lower high, lower low, lower high. So I got first touch, second touch, back down, third touch, back down. So we know this is downtrend. So I go there, 1, 2, back here. So whenever they trend back up and touch this trend line, that's most people consider as will trade somewhere around here, will try to enter somewhere there. But following their combining with different key of different strategy they may have. Okay, they will not just, some people will not just wait immediately open trade when touch because it can break out here. Understand? So that's one way. That's just one way you draw a downtrend. Okay. So that's one there. Another way to draw here the upper trend from there, touch. See, second touch, and then what? See, so it went higher high, higher low, higher high, higher low, and went back up. So some people do what? They will trade here, and then they will take their profit 2 times of the previous higher high, or sometime right to this higher high, they will take their profit here. You know, some people enter like that. That's the bounce. They bounce on it, it went back up. So that's how you need this point to identify. That's one. And then it came back here. People will enter on a third one. Some people will not even do it. They'll wait for the fourth one, which is came here, a breakout. See, it break the trend line. So the moment it break out like that, sometimes it can be a fake breakout, but most people, when they break out like that, they just let it go. It will mean that the market have changed a direction. So either it's going sideways, it will go sideways a few times sometimes before it can start the downward trend. To draw your trend line, you need to add some special tools on it, which is called moving average here, so you are making it easier for you to know where's the market heading. So though at 200, the period is 200, exponential close, and then blue, they'll add it to the chart. That's 200. So the period of the last 200 days, this calculate. So and then they will add another moving average again, which you go to insert indicators, trend, and then here moving average, and then they will add 50 moving average and close. And either use simple moving average and then use rel. So this tell them where the trend is. So whenever the red line here moving average 50 moving average period across the 200 EMA is already shown to them this is a downtrend. So they will be looking to draw their trend line on this one. So they will draw their trend line. So now what happened, that's how they will identify where they want to trade from. So this already tell them it's a downtrend. So they will not be looking to draw their up line, so they will be looking to draw the downtrend. So that's one way. As long as so you see here when sideways market happened, the market was going sideways. There's no one clear direction. It go up, come down, up and down. A break out here, uptrend a little bit, back down. This is considered sideways. So what they will do, they will put their support somewhere there, and then resistance line they put here. So the market was going up to the resistance, come back, support, resistance, a breakout here, trend line up. It showed to them that this market is now uptrend. So the moment the price cross, this trade is no longer valid. So that's one way to draw the trend line, guys. So it can easily identify, make it easy for you to know where the trends are heading, before you are able to draw your trend line. So if it is, how can you trade the trend line now? So this is a daily time frame. Daily time frame, we will say the market is up in a daily time frame from here. The 50 moving average is already above the 200 moving average on the 11th of April 2025. So we know that the uptrend. So they will go to their hourly time frames, which is this, and draw their look for the trend. They know it's a downtrend on the daily time frame. It's uptrend is on the daily time frame. So they'll go to that and try to apply their strategy, which I will show you the 3 strategy most people trade. So I'll go to that date, 11 March 2025. So from 15th of April 2025, we already know on daily time frame the trend is an uptrend. So I'm on an hourly rate. So from that date, I'll start looking for uptrend. So here, the first low here, and then we got higher high, and then second higher low. So we draw from here, the last bar, we touch that on the daily time frame. Sometimes it's not valid, not easy to get new opportunities. So now here, when the market return back to this one here, some people trade, they will not trade because this is the second confirmation. They're looking for the third one, which when the third one came, a breakout. See, a breakout immediately. So this trend is no longer valid because there was no third touch. First, second touch happened, but the third touch didn't happen. I would not consider really this one because that was kind of sideways. So that's one way. And so they will look for new opportunity. Again, that trend didn't work in an uptrend because we already know we are in an uptrend from April 15 up to the current times, 5th of April 2026. So in 1 year, the daily time frame was uptrend. So for some people, they'll only be looking for uptrend. So if you want them, you are like you want to get more trades opportunity, then you have to look at the day 4 hour time frame and then identify if a 4 hour time frame is up, and then you can start looking for opportunity on the 1 hour time frame. But so far, this trend line was not valid. So we now have to look for new trend line for the uptrend. Now I see sideways happening. This is what we consider a sideways. So here it happened. That was the sideways. This is support resistance. So we spoke about that yesterday. So we break out. We're still looking for to draw new trend line. So with the sideways, we cannot, able to identify. So we're still looking for that, because here I try to draw the line. It happened. A breakout. Second one happened. A breakout again. So not valid trade. So here another trend line. So that's why we recommend using 4 hours. With the 1 hour, is very hard to find the opportunity sometimes, because breakout can easily happen. So let's see this one here. If they touch. So see, didn't happen. So I don't want to try when we draw this line here from the end of this bar to there. If you are dragging here a bit, it came back, identify, higher high, higher low, higher high, because you don't want to force. That's what I was talking about. You don't force the trend line like this. It's no longer valid, because this happened and you seen it up. It's like, oh my God. And then you move your trend line from here to push up to this one. You are breaking the rules there. You don't want to be doing that. You don't want to chase the opportunity. If you can't find the opportunity on this pair here, you can find it on another different pair. There's always new opportunity represent on this trading. So don't chase it. So don't try to force your line and to match with this. Try let the line be straight with that. That's all right. So when the price returned back to a breakout, but it was a fake breakout, it went back. Understand? So that's fake breakout. It came back. So what some people will do with a fake breakout, they will look for their support, previous resistance that were here. They look for that, which is this one. Out and break out there, they will buy from there. So but that's why it is all, because breakout happened. So what they will do now, I have to adjust my trend line to what? To this one now, to the new breakout, because it already make my other first trend line invalidate. So come back here. So see, you missed this opportunity here when your trend line was there, but you got it here. So the trend went up, make higher high there. It came back there, higher low. When we break out here, so I'll readjust my trend line to the fake breakout. So when I came here, it went back all the way up. It came down again, the third touch. That's where I would enter here, valid trade, because they have retested that. So most traders are planning to trade here. They will trade there, but what some people will do, if to make this is not a fake breakout, they will draw new trend line for the downside for the small higher low here. So when they draw that, So when the trend touch this and break out this line here, came back and up, they will buy immediately. And then they will put their stop loss and take it out. So that's one way. Some people just, as long they already have the two touches, which is 1, 2, and then the third touch, they will just already know the position side. They will recalculate how much they are willing to lose. So what they will do is that they will buy here immediately. They will see, okay, 160 pips, because they want to double that profit. They will try to take 50% profit here, or double this one. See, 160, they will go for 320 pips, which they hit a target. And then they will give stop loss 1 to 2 ratio, 1 to 2 reward. So they'll put their stop loss 160. So they are willing to let that money go. Even if the trend break out and change and there, they just already make their mind that they are willing to lose it. But because they are following, everything was set up correctly, the trend, they didn't chase the trend line. It came back, a breakout, they missed their opportunity. The trend went out, they didn't chase the line and force their trend line to go up for the trend, price. So they let it be and adjust their trend to the new one, which line with the first one. And then when it happened, immediately they came back to it, the price touched it, they buy it. So they already like, I'm ready to let that happen if it's another fake breakout. So now what happened? Yeah, they make their 300 pips or 320 easy, and then that was it. One trade, that was it. That was enough for them. They out of the game. And then we stay in the uptrend, because remember the daily time show you that the trend line is an uptrend. So you always know that when you have a good 3 touch, you're going to find a great opportunity. Now again, we look for new opportunity. This trend there. So when this, another way I will show you another strategy for the news, how people use it. So when it happen here, when this happened, so the price came back down here, they retest back here. So what they will do is they will put the old resistance here, which has become our support. So they will wait. The price starts the trend line, it break out the trend line. So when it come back down and go back up and retest again and back down, they will sell, buy, resell here. They feel like they need trend, but this trend got a change. So, or they will say that this trend is the upper trend is over for the meantime. So because we are not looking for downtrend, because our daily time frame is our uptrend still until, so we are not looking for downtrend. We're always looking for uptrend because due to the daily time frames. So here, I look for it. See, this one here, give me another opportunity. See, like we said, it can either be the body of, let me make it a little bit bigger. So you see, can see better. So the body or the wicks here, it doesn't matter, but it can be exact when. So because the price, so we put there, we put it there, second touch, and then what happened? Our third touch happened there. So here, when the price go up, drop back, higher high, higher low, higher high, the third touch, they will buy here. Again, here 100 pips, they will put 100 pips loss, and then go for 200 pips, which give it to them here, they out of the market. Or if you are going for 50% here, you out of the market. If you are going for one to one ratio or 1 to 1 reward, you would take your profit here, you out of the market, you wait, the trend line stay valid, it came back down, it break up, came back up, you know. So if you were to buy here, immediately touch, that was another about 95 pips. You put your stop loss because we know it's a strong trend. Why? Our daily time frame is telling us that this trend is still up. As you see here, the 200, the 50 moving average is about the 200 moving average. So I'm not going to be looking for downtrend. I understand that he can still use this side and go for downtrend. Yeah, I understand that. But for me, I want less straight, but more accurate. Okay. The accuracy of my trade, I wanted that. I don't want more trade and less accuracy of the trade. So I want my trade to be more winning trade, even I get less trade to place because there's a lot of market I can play on. So as because it's that, and so this happened. So a new opportunity represent itself here. Here I make money. It came back down. What was the matter? This was the one. It came back here again, reversal, the same trend line. There we go, and 100 pips. And then here, another one. I make the money there, 100 pips. We had about 2 winning pips, more enough of this market, I think. And then you can look on this every time you take here profit. See, because now I already take my profit. I will see if this one is still good. So on the 25th, when it came here, see the price on the 25th, they break out. So no longer valid. Or what would I do? I would have enter again, example, and say 130 pips. I already going there. I'll let it loose, whatever it is. They came back down there, 130. It didn't break. The moment it came back to my entering, I closed that trade immediately. I will let it take 130, but it didn't get it reversed back. I'll close it. No win, no lose. That was it. That trend changed. So the trend is over. This trend line is no longer valid. The, you know, so I will look for new opportunity now in the market. Again, still on the daily time frame is stay high. So we look for new opportunity in the market. The price was below the 50 EMA. So what we do, we wait the price to come above 50 EMA. When the price is above here, it close above the 50 EMA, then we look for opportunity, and which was on there. So on the 3rd of December, the price went above. And here, at this time, I couldn't enter in this trade because the price came back to it. The time it came back to it, the price was below the 50 EMA, 50 moving average. So I would let it go back, but it didn't go back until December. What was to make a second touch? See, I still, because when this happened here, what happened? One, this didn't really touch it, so I can't consider it because my moving average was here. So it didn't touch the came here. I wanted to enter. We enter 30 peak breakout happened. When it happened here, I would have just closed my trade. I know that it came back up, but I wouldn't take it. Some people would have take something called that support. When they break out the support and came here, they would take it. Or some people would have confirmed by re-entering, by joining another trend line going downward here. So when the price or here it came back, break out and close above the trend line, they would take these pips and then they would have go for it. They still make money. But those are all complicated. So you need to know what you are doing before you can do those adjustments. So while we're doing, the simple way is when the price break out, I adjust my moving my trend line again, adjust it to that. So what happened? Went up, come down. The third one came back here, 89, 90 peak. There we go. We take our profit there. See, and then it came back down again. If you were to enter 44 pips, you enter, you lose your 44 pips right there. The trend is over. So now what happened? So that's how you guys, that's how trend line works. So not much to say, but very simple. To like I said, to identify your trend, that's one way or another. If you want to do, it's good to confirm with a daily time frame. If you don't want to do that, you can still do it like 4 hours, which will get you more trade and easy trend change. But it's good that you combine with different strategy. Not every trend will be valid, So whenever you get better trend, like that's one. See here, we put our trend line, we draw the trend line. The 50 is above the 200 in a 4 hour time frame. So we got our first touch. We went back all the way up. We came back second touch, third touch. So we enter there. We make that money. That trade came here, breakout below. So because so sometimes what we do when it touch here, it came here, it touch. So the trade close above that, the trend line, the 250 moving average, that's where some people enter easy. Everybody have their own strategy they will follow. So that's just how trend line is drawing, guys. It's as simple. You need just two touches to confirm the trend line, and moving average make it easy for you the direction where the trend is heading. So you already know, you don't need to second guess where I should be looking to draw my trend line. But if you see 200, the 50 moving average above the 200, you already know you're in the uptrend. I will be looking to find new trend line always with that direction. Lose one trade, believe me, I will not be trading that trend line anymore. The moment you hit my stop loss, I will not be trading that trend line. I will just look for new opportunity. Even if you reverse back and come, no, I will already take my stop loss. I will make sure that I look for new first touch, second touch, and then before I go for trade again. You know, so that's how many people draw the trend line, guys. So it's very simple. So you see here it's above. So I will see if I can draw another trend line. Yeah, see, price was above. So go one back, up, down, close above, you make your money, whatever it is. You want to trade here again, then I will not be, that's lost. I said need trend line. I'll find need trend line here. So look, you need to combine. Trend line is not just like every time I come to it, you place a trade. No, you need to combine with your own different indicators, different strategy, how you work. Like even we have many different moving average settings. So it's always good that you combine with. But I just wanted to show you how to draw your trend line. So you look for one, the higher or the lowest of the market, and then you draw from there. When you have the second reversal, which is that, the moment you identify that, here example, when this price for here higher high and they came down here, lower low, came back up, lower high. So I already know that this is new trend about to begin. I draw towards that. When it dropped down, so you see what happened. There we go. Came here, breakout, fake breakout, came back down. That was it. Even if I was to enter there like many times we do, you will not hit my stop loss or still make money. But it's all about what the risk that you want to take. So It can be very funny sometimes. So you just need to make sure here, because break out there, I will adjust accordingly to that. And this one here, and then it came back, went down. You make that your little money, whatever, depending how many pips you want to take from the table. So we don't have much to say, guys. That's how Trendline. If you have any question, just put your comment. So when we are trading live, it's always good that you have your own strategy going on. Believe me. So I'm only here to show you how Trendline work. But I'm not here to tell you the best strategy that you use. Because it's good that you look for your own strategy. Or if you have anyone in your mind that you can follow, that so that's how it work. All right. So you see another good trend line downward. I draw my line, touch, you know. So you can also do that, you know. So touch down, touch breakout. So yeah, you need to look for your own trend. You need to combine it with price action, you know. You need to combine it with different moving average setting. You need to combine it with different type of indicator you may have. The best times to trade, all this make different sense. So yeah, I don't want to say much, guys. Thank you for taking your time, and that was a bit just a little video for Trendline. So we don't have much to tell you anymore. Thank you again, and I'll see you tomorrow. We'll be doing another video about. I'll bring out the topic tomorrow, but for now, that's it for tonight. You're in a day, have a great day. You're in a night like myself, have a good night and have wonderful sleep. I'll see you again. Don't forget to subscribe to our channel, click the like button and subscribe now. And remember, always disclaimer is I am not a financial advisor, so you need to seek your own professional help. And then do not invest where you cannot afford to lose. Trading also involve with risks. Remember that. So we are on this journey, and step by step we'll get there. Definitely. So bye for now.